Hi, everyone, and welcome to the bi-monthly podcast of our chief financial sponsor, Noble Gold. As you can see, wearing the swag loyally and for good reason, because it is one of the most trusted and respected precious metals dealers, particularly for hard assets or 401k, IRA, pension conversions, etc. And we have the one and only Mr. Micah Haynes, Senior Sales Manager, joining us from a remote location off the backs of the fourth holiday, graciously joining us from where he is. And we're going to be tackling some of the tougher, deeper, more existential issues as to the real suppression of gold and silver when Micah sees those breaking out, which we believe will be now in the month of July, if you've been following the podcast previously, excuse me, based on the information he's provided. So if you're new to the podcast, please do like, subscribe, and share, as it helps the channel grow and others gain the knowledge you're currently being afforded. As you know, Mike has been with Noble Gold for well over 10 years, has a stable base of his own clientele, has worked with some of mine and many others, and done right by everyone, as has the company. And there's an exciting promotion that we're going to talk about at the end of the podcast that is fairly unprecedented, and we'll discuss that with him as well. So I am honored to have him back, as always, the one and only Mr. Micah Haynes. How are you doing today, good sir?
John, I'm super well, thank you. And yeah, accommodating my remote location, like you said, I'm in my camper trailer. We were camping for the fourth. My wife and I's three daughters. So super fun weekend. We didn't get the news that we were hoping for, which I hate to say. It was kind of what I expected in terms of gold revaluation on the 4th of July. So we'll get into that, of course. But yeah, no, it's a good time still. Summertime is in full bloom, and it's a great time to think about, taking steps to protect yourself. I think we're going to have a really volatile fall with midterms and stuff like that. So this is a great time for people to be thinking about making some proactive changes and some proactive moves.
I agree.
And the market obviously is accommodating us price wise too, still for a little bit longer. So that's great.
I was going to say, while the getting's good, while the price is still really low, because we know collectively it's not going to stay that way. To your point. So without further ado, first question I want to ask you out of the gate is: there's a prevailing opinion by many of the technical analysts who believe it is necessary that the price of silver return to the scene of the crime, basically going back to where the price finally punched convincingly through the decades-old previous high of 50 before it can proceed onto its bull run journey higher. Do you agree with that premise?
I certainly think it's in the realm of possibility when we talk about technical analysis. It's not a science, it's an art. And when you look at trend lines and resistance points and support levels, there are many ways to draw lines. Sometimes I refer to the big TA accounts that I follow, the big technical analysis or technicians that I follow. It's like the squiggle boys, right? You're drawing lines and squiggles and all this stuff. And it does make a lot of sense, though, that we may have to go and retest the $50 mark. I think that we would have already seen it by now if we were going to have to do that. But the rationale for why we would have to is that, like you said, $50 was the all-time high for 5 decades. And we only finally broke through 50 convincingly in October. And when that happened, as you know, and we've talked about, it shot all the way up to $120. And then after the highs in January, it did correct significantly and very unnaturally, of course, because of paper market suppression and price flushing. But we've spent the last 6 months basically churning within a $30, band, 60 to 90, back and forth, just roller coastering in that range. And so that's called the consolidative zone, but we never did go down to that 50 mark. Now we got to 56 and change very briefly at the end of June. I mentioned on our last show that when you overlay decades and decades worth of seasonal price data, you often have a low hit in June, which can be a significant low for the rest of the year. And we did get to 56 or so. Was that the low? Is it already past us? We're up at $62 or so right now. We had a strong beginning in July, which made me think maybe we are actually coming out of the worst time seasonally for price. But I'd say this, John, I'd say that the risk of $10 to the downside is completely worth the hundreds of dollars of potential upside over the following years. I'm still looking for $300 to $500 silver in and around 2030. That's my own personal target and my analysis. A lot of other analysts agree with me. Some are shooting for higher. Some are shooting for those numbers, but a lot sooner. I kind of happen to be a middle of the road, more conservative leaning with my expectations, just so I'm not being a sensationalist with where price can go in such a short period of time. And so buying physical gold and physical silver, the idea is that you're protecting yourself, holding the best form of money universally and through history, and you're doing that to protect yourself first and foremost. But we know that these metals are going much higher given the national debt, the looming stock market and financial crisis. And in my opinion, like I said, having to go back to 50, which again, we haven't seen. The bears have tried everything. And again, their ability to flush price on paper, they still haven't been able to get it down to that mark. Maybe they do in the coming weeks. I think that that would be the only kind of chance that they have. So unless we can get back there soon, I think the lows may be behind us. So we don't know, but $10 of downside is certainly worth hundreds of dollars of upside.
Yeah, I would, excuse me, I would agree with that because we've, excuse me, we've crossed the barrier over 62, and I think the next leg up would be 75. Once it gets to that 75 threshold of suppression, and it's going to move back up 80 and so forth. It's just a question of the age-old question: how quickly will it accelerate? Because we saw in February, as you said, over 120 like that. And your sort of your sweet spot you talked about, the next leg up is, I believe, 120 to 180. We can easily eclipse that once the suppression ends or this holding pattern ends. We're going to see what Fed Chair Warsh is planning to do. Excuse me, in terms of interest rates, I think there will be a precipitous drop. It's just a question of whether there'll be one more pause or he'll just start successively dropping rates July onward, because basically everybody's taking August off. So this month there's a lot that's
exactly
hinging on that.
Yeah. And if you don't mind, John, I just want to jump in there for a sec. So it was last week already, after, just 2 weeks or 3 weeks from the previous FOMC, Kevin Warsh's first as the actual chair presiding over the Fed. And just last week, he already said, "Oh, inflation numbers actually seem to be, kind of coming back down." And that's obviously because the gas prices have been dropping with the kind of potential, conflict resolution with what's been going on in the Middle East. And so I don't think, for all the reasons mentioned previously, that they actually can raise rates this year. They're not going to be able to do that without really kicking the stock market and creating a lot of volatility there. And so I think for political reasons, again, they can't hike, but the talk about maybe needing to, because in high inflation numbers, well, that narrative is already sort of changing. And I think, by the time they meet again this month, we'll probably have, again, lower expectations about any rate hikes later this year. And that will impact the dollar. We've already seen the dollar drop off of major resistance around 102. And that's on the dollar relative strength index, the Dixie. And so, the dollar's at major resistance. That means the top might be in for the dollar. That was obviously caused by hawkish comments from the Fed chair, the new Fed chair, Kevin Warsh. But I think that tune will change. I think it's all bark, no bite. I don't think that they can do the things that they're proposing. And we'll have to see. But again, summertime, it's really slow for markets normally, right? There's not a whole lot. Wall Street's in the Hamptons. People aren't really looking at portfolio changes. They're not doing a whole lot of stuff. But because of that, so we're saying that summertime's really slow generally for markets, right? The whole sell in May and go away. Wall Street's in the Hamptons vacationing. People aren't making big portfolio changes. So I think the market's really hinging and waiting on what happens at the next FOMC just a couple of weeks from now. And again, I don't think the dollar is going to be able to do a whole lot if inflation's coming down and they're going to be kind of walking back these hawkish comments about potential rate hikes.
Yeah, absolutely. And that's what kind of, thank you, Mike. That leads into my next question that kind of dovetails back to the original point that you made about our expectations or hopes that President Trump would announce a gold, silver revaluation and asset-backed reset that would find its way into everything else, obviously cryptos, currencies, et cetera. Now that hasn't happened, there must be some type of reason. And so I want to float an idea by you and see what you think. We have next week on the 17th, we have Iraq coming in, getting ready to hopefully announce that they're returning to the international stage on an asset-backed economy, gold, oil, et cetera, et cetera. Excuse me. We also have the Clarity Act that you mentioned coming in the wings. They've got to most likely get it done this month because they've got August recess with Congress. and then that has huge implications for cryptos, et cetera. And so somewhere in there would be, you would think, logically, seemingly an optimal time to bring in the metals while you're doing these other things. Do you think that he delayed mentioning it on the 4th because his plan is to mention it now on the 17th towards the second half of the month?
There's a chance. I would still put a really low probability on that, John. And it's not that I don't think we'll return to a gold standard. It's not that I don't think that we'll have much higher gold and silver prices. It's not that I don't think that 20,000 plus dollar gold or 500 plus dollar silver is a possibility. And I've shared this with you openly over the time that we've spoken together, is that I don't think that a government proactively handcuffs themselves from being able to print money on the brink of a financial disaster. I do think what's going on in the stock market with AI and the bubble that's building there, or has been for the last couple of years, we've also got a bubble in housing. The bond market's also very shaky. I think we have an everything bubble, and we probably at some point see a collapse in those markets. And I'm looking for something like a 2001 where the NASDAQ crashed by 85%, or something like a 2008 where the actual leverage in the system and the crash that ensued actually created institutional and financial systemic financial problems, not just here in the US, but in the world. And I think that we could see, again, a mix like a 1929, a 2001, and a 2008 all mixed together. And I don't think we're far away from that. And I'm not saying that to be all doom and gloom. I'm not saying that happens today or next month. My guess is it's sometime after midterms, maybe sometime in the next 12 months. When that happens, John, they will need to print money like crazy, like we've never seen before. And I kind of refer to that as the big print. So we had a big print in 2020 to bail us out of the COVID lockdowns. We had a big print after 2008, obviously. That was really the first experimentations with quantitative easing. We are going to see the biggest print of all time when the next bubble pops. And I'm not saying if, I'm saying when. And when that happens, they need to be able to have, well, they only have two tools and they need to have full access to them. It's the ability to lower rates and the ability to print money. And it'll be after the next crisis and the ensuing money printing and QE, or whatever they'll call it, that they actually wreck the dollar and cause higher hyperinflation. And that will be the turning point or the inflection point where the government realizes they have to return to a gold standard in order to instill confidence in the currency's ability to perform its two main functions of holding value and therefore being used as a unit of exchange. So, in my opinion, it didn't happen on the 4th. I wasn't expecting it to. I don't think it'll happen in a couple of weeks either around the Clarity Act, whatever the next steps are, announcements are. I think that the return to a gold standard, again, happens maybe 2030, early 2030s after the next big print. And before that happens, obviously, we're going to have some type of crisis that justifies that type of government response. It's coming. It's just not here right now. It's not here yet, but the conditions are set for that to happen almost at any time.
Yeah, absolutely. And I'm this is just me speaking. I'm not a financial advisor, not constitutes financial advice, but when was the last crash? September of '08. So it'd be interesting. History tends to repeat itself. If it did happen in September again, right before the midterms, would force a purge moment.
And that's a really important just comment there. We haven't had a regular business cycle in almost 20 years, right? Like it's 18 years. We haven't had a recession, like a really long recession. Now, COVID was obviously kind of a different set of circumstances, obviously, and it was global too. That's what caused like the last big print. But the next big print will be triggered by a financial crisis where it's all the bubbles popping at once: bonds, stocks, housing. And it's, I hate to make this analogy, but it's like they keep doing everything they can to delay any kind of recession or delay any kind of stock market correction for political reasons. And it's because no sitting president wants to deal with a recession or a market crash because it kind of muddies and just blemishes the rest of their term. And so every president we've had since '08 just does what they can, prints, lowers rates, kicks the can down the road, but it's like trying to avoid a hangover. You can't avoid a hangover by just drinking more and having more, stuff to the mix and stuff to the party, eventually you have to have kind of that wake up call in that moment where you realize you've got to deal with the problems you've kind of created for yourself. And the longer you try to avoid your hangover, the worse it eventually is. And so normally a business cycle happens about every 10 years, right? We
Mm.
had one in '01, 92 prior to that, 2008, and then nothing in the teens and nothing in the 20s, barring COVID, which again, different, some might call that a recession, but it wasn't. Obviously, a totally different kettle of fish. So I think we're overdue, and just kind of again, it goes back to my point. It's not a matter of if, it's just a matter of when, and when that time comes. My expectation is capital rotation into safe haven assets like gold and silver is going to be enormous, like stuff we've never seen before. And I've mentioned this on your podcast before. It's always worth re-mentioning because it's just an interesting stat. Half of 1% of American portfolios is exposed to the precious metals complex. And that includes physical gold and physical silver, like we sell and help our clients obtain. It also includes all the miners, all the ETFs, all the exchange traded funds and certificates and everything. Everything combined, half of 1%. I'm expecting at least 3 to 5, which means 6 to 10 times more capital in this space. But again, you have to have kind of a sequence of events before regular people are thinking about this. So you have to have the pain before they're really looking to put their capital into the safe haven. Um, so if you can do anything you can to prepare yourself for that early, now is it going to be in September, October? It would be interesting to see if we do get some market turbulence pre-midterms. But again, my opinion is they'll probably do everything they can prior to that to kind of keep it chugging along, making new highs, smooth sailing, because it'll be such a barometer for the success of the administration going into midterms. They're going to want all-time highs at least, I think, before that happens. So we'll just have to see how things play out.
Indeed, it's just my concern is in that bubble, the bigger it gets, the quicker it's going to burst. So, but that's always
The
to watch
bigger they
and see.
are, the bigger
Harder
they
they
are, the
fall.
harder they fall. That's right.
Absolutely, brother. Speaking of President Trump, he recently mentioned again the idea of auditing Fort Knox. We've seen this idea kind of swell, then come back down. Now it's coming back up again. I think the midterms has a lot to do with that. To your previous point, what would be the reasoning for doing it now? And if they do prove the gold exists, then what does this mean ultimately?
Yeah, I think proving that it's there and having at least those 8,100 tons or 261 million ounces, that's the minimum expectation, is that we have that. It would be incredibly bad for the dollar and for the government and the Treasury and the Fed and all of our big institutions if we don't actually have it, or it's encumbered, or we have it, but it's not good delivery, meaning the purity is not there. And there's so many rumors about it not being there or not being good delivery, or it was leased or sold, or it's been papered over a million times. Um, it's interesting that every time he brings it up, it's very quick and then it just fizzles right out and just goes, right back to crickets. Just dead silent on any kind of follow up on it. He talked about it first in February of 2025, again just a few weeks ago. I think that he has to, at some point during his term, to complete an audit, or it'll just kind of be like, why did he ever bring it up? And I think that they do have intentions to do that. Um, I do think that the idea of a gold-backed bond was maybe the most likely, like introducing some kind of gold-backed bond during this term. And to be able to do that, they need to absolutely have the real number of ounces of gold or tons of gold that are in the treasury. And so I think that they need to complete that audit at some point in order to just instill confidence. And it's like you can't really open a door on something that big and contentious without actually kind of doing your due diligence and following up and being able to close the loop. Opening the door to all the rumors and what's the plan here and all this stuff. I think it just is bad for people's level of confidence. I'm not sure what the plan is there, but I think they'll end up having to conclude those audits at some point, hopefully sooner rather than later. And I'd like for that to be done pre-midterm, but the actual physical auditing process takes years. The last time they did it, they started in 71, it completed in 74. Like it takes years to do properly. And so, it's very hard to think that they could do it over the course of months if they haven't already started. And maybe they have, maybe they started last year. And they're just
Yeah.
talking about it now because maybe they're getting towards some kind of conclusive result, but we'll just have to wait and see.
Yeah, agreed. I think personally they have been doing it behind the scenes, clandestine for years, and they're just bringing it up now because of the convenience of the heightening of where we are from July to the midterms. To your point, it seems logical and even fiscally responsible to revalue the price of gold to at least its to match its current price. This will legitimately create more than $1 trillion for the current administration and perhaps give them extra money to maneuver. But wouldn't it be enough to pay down? Would it be enough to pay down the almost 40 trillion debt in any measurable way? And do you foresee the U.S. revaluing gold higher than the current price? And if so, what do you think the price might be, and what would be the implications for the dollar and the rest of the world as a result?
Yeah, so to eliminate the debt overnight, which I, would love to see them do, um, you'd need $150,000 per ounce for gold. And it's currently a little over 4,000, $4,100. At 4,000, so marking it to market, meaning just holding the actual gold on the balance sheet at the current market price would create $1 trillion. And that would be injected into the gold revaluation account. And again, the way that that works is we have a gold revaluation account at the Treasury. It's been used in the past when they have on a gold standard repriced an ounce of gold. When they reprice it, they're not selling it. It's just that the new calculations of how much they hold at that new set price injects cash into the gold revaluation account to be used for whatever the government wants or sees fit at that time. So marking it to market at 4,000, the rate, like we said, at 8,100 tons or 261 million ounces, it's $1 trillion. It's not nothing. It's huge to raise $1 trillion with no new taxes or no new spending cuts. But it hardly makes a dent in 40 trillion, right? Yeah, it's negligible. And so at 20,000, you'd be looking at 5 trillion. You could go from 40 to 35, just where we were really like 2 years ago. It's also fairly negligible. But that's a huge jump in the gold price. And so, you know, I, I struggle with the math. What number would actually be significant enough for them to cut the debt in half or cut it by 30% or whatever number you tell me what number would inspire confidence in Americans to then say, okay, well, we've got our fiscal house in order. Um, Debt to GDP ratios, we're 120% of debt to GDP. Historically, we're at the point now where most governments actually default. Again, it's just a matter of when, not if. Anytime in history that a nation has debt to GDP surpassing 120% to GDP, debt to GDP, they do go bankrupt. And so we won't, as obviously as a currency issuer and as the world's reserve currency holders, still for however long. Um, but what's most likely is that they'll inflate away the debt. And again, the next big print is their best opportunity to do that. And you're probably familiar with this kind of saying or this concept, John, of like um, uh, problem, crisis, solution. They've got a problem, they manufacture a crisis, and that allows them to roll out kind of a pre-engineered solution. Well, there's no way we can pay our way out of the debt. A gold revaluation could do it if they're going to these high numbers, 30, 40, 50,000, 100, 150,000. Sure. But that also benefits um, our geopolitical opponents like China, who, in my opinion, probably hold more gold than we do, and we know they've been buying like crazy. And so the risk with revaluing gold too high is it benefits the countries that we're challenging and working against for global dominance, and we would help them as much as we help ourselves. The most likely way is that they just inflate away the debt by making 40 trillion a negligible number, and by just printing so much money and creating such high inflation that it just kind of you just you paper it over, and at some point that'll end up leading to a sovereign debt crisis and a debt jubilee. And I think that that's likely as well for some time. Again, going into the 2030s, you have to get through all these steps first. You have to have the bust, you have to have the print, you have to get to the hyperinflationary outcome of that, and then every nation is also in this boat. It's not just us. Then you get some kind of consensus, a global debt jubilee or something like that, that resets everything. back to zero in terms of debt, but now you have to have all your gold as collateral. And it'll be a new gold backed system. So that's kind of my take on where things are going. That's the roadmap that I see playing out. And I hope that's maybe not the answer you're looking for, but that's the way that I'd answer that question.
No, I just wanted your objective point of view, based on the purview of information and how high you're sitting up and what you're seeing on a day-to-day basis. There is another interesting thought we could throw into the mix, Micah, which I'd be remiss if I didn't. Fellow Noble Gold sponsor X22 brings this up quite a bit on his channel, Dave, that what if that debt, let's say that, because I don't think that's the real rate of it. I think it's probably closer to 320 trillion or whatever it is, but what if that debt, 90% of it falls on the deep state and is not consumer debt? Then we value gold to say whatever he's going to revalue at 8, 10,000, whatever it is. That acts when it cuts the head of the Hydra off, falls on the deep state, and the majority of the public is going to be exempt from that because it wasn't debt that the public created. That was artificial, central bank, Federal Reserve, parliamentary debt ostensibly, and that would be
Yeah.
a way to kind of kill two birds with one stone.
I think that'd be a lovely situation. I think it would still end up with the state essentially becoming insolvent. So this debt jubilee or this bankruptcy concept, of course, if you can print money in your basement, you'll never go bankrupt. But if all this debt ends up falling on the deep state and just gets stuck on them, then you end up maybe seeing it just get completely obliterated and wiped out. I think as citizens, obviously, we have no control about the level of debt they put us in on a per capita basis. It's horrendous to think about how indebted we all are for our share of the government's national debt. And, it's a scary number. I actually don't know what it is right now on a per capita basis, but it's probably it's the highest it's ever been. So it would be nice to get back to a sound money system where we are actually kind of oriented as a republic, where the people are in charge and we control the government and they work for us and we have power because the money that is being used puts us in a position where it can't be manipulated or perverted by those in charge. And I think that that's a bit of a utopian concept that we'll be able to get there. And I think eventually currency resets are again inevitable. Like you do run through these cycles through history. It's just that nobody living right now has been through an inflationary or hyperinflationary. No one in the West has experienced hyperinflation or a financial reset. These things happen, but they happen every 80 to 100 years. And so I think all the possibilities are still out there. Everything is on the table. I think that all roads lead to gold. I think that at the end of the day, you as an individual, as a sovereign being, as a sovereign citizen, need to have your protection plan. And I've been doing this, like you said, like over 10 years. I invest everything in precious metals. I look at it as savings. Of course, we've made a lot of money because gold and silver prices are so much higher than when I first started buying. The trajectory of gold and silver are going to continue to be much higher. And we haven't seen anything yet. We have seen only like the first little teaser of what can happen to gold and silver. 5,600 and 120 for silver, 5,600 for gold, 120 for silver back in January. 10,000 is my low mark for gold at the end of the decade. 3 to 500 is my low mark for silver, but don't think of them in terms of price. What's the point of measuring something in a unit that'll eventually go away or be reset and put into something else? And what happens with hard assets, property and land and fine art and any tangible good gets revalued in that next currency because it's still there in its physical form, but the unit of measurement will change. So don't think of it so much as I'm, going to make so much money. It's you are going to protect your wealth, and that transfer of, a economy of intangibles to an economy that, like you were saying, with Iran and all these things and BRICS having a commodity based system where everything is actually concretely based on the value of resources and monetary metals. We're going to go to that. It's just, these things are a long process. It's not just going to be an event. And, we were hoping for a switch to get flicked that would just put us over again, just because of the way that governments work and politicians work, and they're only thinking 4 years at a time, and they want to make things easy for their reelection in 2 years or the midterms in 2 years or whatever the case may be. We just kick the can and make the problems worse and compound them. But Jordan Peterson, one of my kind of biggest influences. I really like him. He says like conflict avoided is conflict compounded, right? The longer you avoid kind of an uncomfortable situation, the worse it gets when you eventually have to face the music, and we will.
Yeah. Well, as I say, the bottom line is it's not a question of if, when, but when. And that's what we're kind of trying to figure out. You brought up China. Great segue point because they've been aggressively and quietly, as you said, accumulating physical gold reserves. Do you foresee China backing the yuan with gold? And if they did, what would happen? What would that be tantamount to a declaration of war against the US? Or would we need to follow suit and begin backing the dollar and treasuries with gold as well?
Yeah, I think it's a race to who will have the infrastructure in place first to be able to have a gold-backed currency. Um, again, whether they do it reactively or proactively, I think China's being proactive. The US is not trying to hang on to a dying system, the petrodollar and the monopoly that they have. But China has been creating these exchanges and this massive vaulting infrastructure all over the world to be able to actually make trading settled in gold a thing. And they're better analysts on this than me. Vince Lancy is actually one of them, who I follow and respect a ton, who's done a lot of research on this. But they actually have a gold vaulting network all over the Asias that is intended for countries to be able to collateralize their gold to receive infrastructure and different types of loans from China and in the yuan to be able to build out their economies and do all this stuff. And in the past, um, U.S. Treasuries were used and bonds were used to collateralize um, to be able to get Chinese infrastructure loans. And they don't want dollars, right? We know now that they've been dropping the dollar for gold. They've been buying it hand over fist. We had back in the fall of last year, for the first time in 80 years, the amount of wealth held abroad in gold is now higher than the amount of wealth held in treasuries. So the first time in 80 years where bond holdings are lower than gold holdings. That trend is going to continue. And so, like I said, China, I think, is being proactive. They're setting up the system. It may not be in place yet. It may not be rolling out. Is it an active war? Sure. I think it actually, it's a massive move for global dominance and the future of money. And it would definitely strip a lot of strength out of the US dollar. But again, these things don't happen overnight. It's going to take years to see this play out and for the momentum to slowly build. Now, when BRICS were all the rage, going back a couple of years, everyone said, "Oh, it's happening overnight. The dollar's done." BRICS is a kind of a parallel system that allows all these other entities to exchange and buy resources and oil and energy from each other in something outside of the US dollar. Well, it kind of fizzled, but it's not that it didn't actually happen. From 2022 to 2024, um, the amount of transactions or money that was, pardon me, the amount of energy trade globally that was happening outside of the dollar went from zero to nearly 20% in just 2 years. So you had 20% of all the energy transactions globally occurring in something outside of the US dollar for the first time in history as well. And so again, these kind of slow steps in that direction, they've been happening for a long time, but they'll still take a long time to unravel and to kind of really show us to where things are going. And again, we can't predict the future, but these things are very not like the writing's on the wall. They're not predictable, but do what they do, not what they say. It's like, why is every big nation, billionaire, institution, hedge fund, why are they all stacking physical metals and other strategic commodities? Because that's the premier collateral that everybody wants. You as an individual should be thinking the same.
Yeah, I think there's just ostensibly, Mike, there's an air of inevitability to all of it. Kind of
Oh yeah, it's an
the
intractable
overarching
path.
point.
We're
Yeah.
we're quite a ways down an intractable path. We cannot change the direction of
Mm-mm.
this stuff. It's just, is it a winding path? Is it straight? Are we taking the scenic route? How long will it take for us to finally get to the end destination? But the end destination is a world where gold and silver are viewed as, again, the ultimate form of money, and dollars will be obsolete.
Yeah.
Or, they might not be worthless, but they'll certainly be worth less.
Nice play on words. I like that. And then last one for today, Micah, to respect your time and the audience's time, I'm going to show you an image on the screen. So just bear with me a minute as I pull this up. And this is courtesy of a fellow patriot that we have on our channel a lot. Captain Kyle put this up. This is last week. Prior to the 4th, you probably saw this image. Apparently, back in the day when people were debt free, they would put this over their doorpost to signify they were debt free. And you see the White House put this up over the White House lawn, as you can see. So the question is, does this, in your mind, does this image signal the golden age, gold standard returns with the removal of all artificial federal debts?
Yeah, I love the amount of cookie crumbs that are being laid out for us on this stuff. The $20,000 price for 250th Liberty Bell commemorative gold coin. Everyone bought into that, saying, "Okay, this is like evidence of a gold revaluation." The most telling one that I think is actually still maybe leaving the door open for me a little bit, like I say, 5 to 10% chance perhaps, is who's betting tens of millions of dollars on $20,000 gold by the end of December. Someone from the inside is, and $900 silver. Now this other image, which I like, yeah, I love this, but where's the news release? Where was the announcement we were all expecting? I know many of my colleagues and my clients and like-minded individuals were kind of waiting in anticipation for something big on the 4th. I can't imagine that, they would do something that big and not announce it. Unless again, it's part of this extremely clandestine plan. And maybe they did clear the books and maybe they did revalue gold and, they're just not announcing it so that other things can be done, like potentially, all that stuff, I don't want to say it's a 0% probability, but to me, I like to live in, kind of like, what are we seeing? What are we experiencing? What's the actual facts, right? And we've got gold at 4,100, silver at $62. A great time to buy and protect yourself for where we are going. Over 20,000 is more than possible. I've already mentioned my silver targets. Again, we are going in that direction, but is it going to be a proactive switch, a flick of a switch on the wall where boom, debt's gone? I don't think so. I'd love for that to happen, but I just don't see it happening. So, again, leaving these cookie crumbs and these little dog whistles, I love them. They give me hope, but they kind of let me down too because I'm waiting and I'm expecting, and then nothing happens. So don't wait for anyone else to save you, right? The government's not here to save you. You need to be able to do what you can for yourself and just take those steps when you're ready. And I think the time is now. Again, seasonal low in price, still on the low end of the consolidated range. We've got a crazy fall coming up. We got a market disaster that's happening. Market disaster in the making.
It's the perfect
stocks
storm.
And everything else. It is. All the stars have aligned for gold and silver.
Yeah.
The only thing is obviously price is low. So those who bought in was a little higher are, maybe in the short term, just wanting it to get back up there so they feel good again, and they will. And I think if you liked what happened from October to January, from 50 to 120, the next leg higher is going to be as vicious. Just you got to give it a little bit of time, and we'll get there. But keep your eyes on the prize. End of the decade.
Yep.
Prepare, and big picture. All these things we talked about, what's happening globally, that stuff's not going away. It's only going to get crazier. It's only going to get busier. It's only going to become more obvious that gold is the play. But for now, these little kind of false hopes about it happening really quickly, they're a little misleading, but I understand kind of why they throw these flags up for us.
Well, we just have to see how, as you said, how it all plays out. And it's a very unpredictable thing. We don't know how the road's going to wind, but I do think it'll be a suddenly moment for sure. And well, again, we'll have to see how it all kind of transpires. So folks, nothing really left to say about it. We've kind of extenuated the point pretty well. Get in while the getting's good. And to do that, Noble Gold is helping in every way possible to do that. Their July promotion is pretty special. I'm going to bring it up on the screen right now. So if you qualify for an account, whether that's a straight purchase or annuity, 401k, IRA conversion for those qualified accounts, they're actually giving away for the month of July a 250th year independence 9999 10-ounce bar, very rare, very hard to get, commemorating our country's 250th anniversary. It's a very nice touch for getting in the game. So get in while you can. We're going to leave the link below in the description, noblegoldinvestments.com. My keyword is JD Metals. Make sure if you call in that you mention me on the podcast, you saw us here, or if you fill out the form through the link, just put my name there and let them know that you saw the podcast and what you're looking to do, what your initiatives are. Either Micah or Hope or any of the other established consultants can walk you through, give you a lot of education, guidance, kind of assess your situation on a very personalized level and work with you at your pace and direction. No pressure, no tactics, just very straightforward talk. And Mike would not be able to maintain a stable level of clientele for over 10 years if that were not the case. So again, noblegoldinvestments.com /JD Metals is my promo code. And again, the staff, no problem, will be more than happy to help you at your direction. Mike, any last thoughts you have for today?
Yeah, just one thing I want to throw out is my email. What I've noticed lately, I've done this on a few shows, John, is I know people are a little gun shy. First, they need to know we're education based. We want to figure out your situation. Like you said, it's case by case. We'll customize and personalize and all that stuff. But sometimes people don't want to call, and I get that. So my email, Micah, Micah, at nobleira.com. And sometimes a few questions in an email is kind of the best way to crack the ice. And I appreciate people who don't want to chat yet, that just want to kind of suss stuff out and gather information. They're just in a discovery phase. So that's just a kind of an additional thing I want to throw out there for those that might be kind of the right approach, is to just email instead of call. But call, ask for me, any of my great colleagues, like you said. And thanks for having me on, John. So I think we have a really exciting end of the year. We've started Q3. The first half is gone. What a half it was. I think we do see new all-time highs for both metals before the end of the year. We just need kind of a catalyst to get out of here. The dollar rolling over, inflation and expectations rolling over is actually a great sign. We're already into that now. And let's see how the rest of the summer goes. But people need to enjoy their summers, but also take the time to think about preparing yourself, your portfolio, your family. And thank you so much for having me on. As always, it's a pleasure. And we'll see you again.
Yes, Micah Haynes, Senior Sales Manager for Noble Gold Investments, our Chief Financial Sponsor for the channel. Thank you for joining us, good sir, on your undisclosed location. We appreciate your time and expertise, and we hope you have a great rest of the week, and we will see you again in 2 weeks.
Thanks, John.
Thanks, Micah.